where do you see opportunity right now? What are you buying?
Well, I like large cap value. I think any company that's making a profit now, guess what? The economy is going to get better in the third quarter. We're eventually going to have one of those quarters where everybody says, oh, it's going to go up by 3% this next quarter. And that was like last July and August we waited, and then the fall came and went, and winter is coming and going. Yes, there is still Santa Claus, and I think we're actually going to see some growth. And I think companies that are making money now and paying a dividend are only going to get better. That's the opportunity. Right. But you got to watch your bonds right now. If you don't know what your duration is on your bonds, you better call up somebody real quick.
Okay, if anybody doesn't know that at this point, because 3 years ago they were all starting to worry about that.
I know. But guess what? With duration, very simple. Interest rates, could they get any lower?
I know. All right, let's hold off on that thought for now, because that's a whole other conversation. But Mary, you were furrowing your brow.
No, I was. What's going to be the growth driver then in the third quarter? If you're saying we're going to see that, what's going to change? And to change things for these companies in the third quarter?
Well, I think we're going to see a lot of pent-up demand, meaning that I couldn't buy during the winter because unless your favorite color was white, you sure weren't buying a lot of cars, and cars are still old. I think we're going to see spending. Now, it's not going to be on a snowblower anymore, Mary. I think it's going to be on, a swimsuit, or maybe it'll be in the leisure industry. I think we're going to see some of that, and that would be my take.
Speaking of which, Walt Disney just priced, I think it's 30-year debt. It's something like half a percentage point higher than where the U.S. Treasury is trading right now, and look how low that is anyway. Stephanie, what about you? Do you agree with what Nathan's saying? Where do you see value?
Well, I do think that the bond market is the most surprising thing this whole year. I mean, it's like, I feel like deja vu. We come on every week and we say the same thing. My goodness, 10-year bond yield down again. And once again, 244 is a really low number. I don't think it's going to stay here. Maybe it goes lower in the near term, and I have no idea, honestly, why, other than, people short and that kind of thing, and relative to where German bonds are, yields, and Japan, I get all that. But I do think the economy is getting better. I mean, look at yesterday's durable goods. In that report, you had better business investment, and that's where I think the growth is going to be in the second half of the year. We've been waiting for that, and so if we do get that, I think you will see a little bit better economy, a little bit better higher rates, and I do think that earnings have been pretty good in the face of all this uncertainty, and that to me is the most important.
And Eamon, I don't know if you hear what Doug Yearley told us last hour, or not even last hour, just a few minutes ago here, CEO of Toll Brothers. They just turned in a decent quarter, better than expected, by the way. This despite the fact their average selling price $700,000 from in the high 500s. And we said to him, well, wait a minute, are you doing so well because you're the housing market of the 1%? And he effectively said, yes, 20% of their buyers are all cash. Mortgage rates almost don't matter. And that's the main lever you'd expect to benefit as rates go lower here.
That's what you have to be at this point if you're going to be in this market, is in that very high end in terms of housing. And it makes you wonder, at what point will lending get a little bit looser in this country? We had a huge pendulum switch on lending after the financial crisis.
But I guess at some point, does that matter, though? Isn't it really the fact that prices have gone up a little bit? People just aren't in a financial position where they really feel like, how much looser do conditions really have to be?
Well, I think for you to see a huge boom in the wealth effect, you're going to have to see lending standards loosen up for the rest of us, the people who can't afford those jumbo loans.
How much more
that doesn't seem like it's imminent. The banks seem like they're pretty comfortable with very tight credit right now in terms of access to mortgage.
Actually, there is a conference this week, and all the banks are speaking at it, and they're all basically saying that loan growth is inching up higher.